So, in today's world famous option trading video, I will show you how to mitigate risk and how to play some defense and how to adjust trades. And these are just ideas. I am not a financial advisor. You should definitely consult with somebody that knows what the hell they're doing. Okay, so contact a financial advisor and let them walk you through how to trade in your account. Okay. Um, this world famous option video is dedicated to my good friend Gustavo in Miami, my Venezuelan connection, who is not only a chef but a all-around good guy. He's an engineering student. He's a CrossFit champ, and he's also learning how to trade options. And here you go. Okay, so I hope this video helps you, and it helps everybody out there who is willing to listen to what I have to offer, which is not really that much, right? Because I'm just a guy on YouTube. You don't know me. I don't know you. I don't know your situation financially. And all I know is there's a lot of fake gurus out there trading options and they're not showing their real accounts. And here I am. I'm sharing with you my real account. Okay. Um, and ways to trade, and you should just, just just be careful when you're trading options. That's all I can say. I will say that I do have in my account real estate investment trusts, closed-end funds that pay monthly and quarterly dividends, okay? And I don't discuss those on my videos here. And I also have hedges on the SPX. You may have them in SPY. SPY is about 1/10 the size of SPX. But basically, this is a drag on your account. It's for if the market crashes and you have some protection in place. And it's just to be proactive in case there is another disaster like we had last year. Okay, so the whole thing with option trading is you have to manage risk, and um, that's your priority. You have to decide the percentage of your overall portfolio that you want to dedicate to selling puts. Okay, you may have a pension, you may have a job, you may have Social Security, you may have um, real estate, um, that's, you know, investment property that's paying you monthly. Okay, these option trades that I'm sharing are for risk assets only, and you should um, really consider that risk that you have. Okay, this may be 5–10% of your portfolio, maybe more. I don't know. I don't know your situation. Just keep that in mind. But the focus should always be on mitigating risk. Okay, when you're dealing with trades, and um, you know, you have to, you know, I always stress having a hedge on your overall portfolio, and I use SPX. Okay, and I buy options, and I go out a couple of months, maybe 3 months, and I'll be buying options. It's a drag on my portfolio, but it's going to protect me against a crash. Okay, and so I did make a video, I think a couple months back, on the effect of what that may have on your account. Okay, if you were in the market during the crash of last year. Okay, so you all these stocks that I have here are, I would say, I would want to own. Okay, and I I would say they're quality stocks. I mean, you may or may not agree with that. I mean, some of them, American Airlines, or CRISPR, or Win, might not be, top of the line, or Iron Mountain, top of the line stocks that you want to have in your portfolio. But for me, they've been working, and I'm always selling. You know, I try to keep the contract size down to just one contract. Okay, and I will just say I want to go over some trade adjustments that uh, you might want to consider if a stock is going against you. Okay, so in this, okay, I'll look at CRISPR. Okay, CRISPR was my leading stock of last year. It was my best performing stock. Okay, so this year it's down over 500 bucks. Okay, and I think it was down a little bit further than that at some point. Okay, but I want to just show you what I would do if a stock goes against me, and I just want to give you some examples. First off, this trade, okay, this trade is not in a loss. Okay, this is a trade I'm looking to roll. Okay, but for example, I collected $295 on this stock. This trade I rolled up. Okay, and right now it's worth $295. Okay, and if this were to go against me and I were to have a $295 loss, I would say, oh shit, I'm wrong. Okay, I was wrong on this stock. Okay, close it out. Let me take my loss and move on to something else. Okay, that's one thing you could do. You could say, okay, I collected X amount and I'm down X amount. So I was definitely wrong. Let me move on to something else, okay? Or what you could do is you could roll it to a further out month. Okay, you can buy back this July. Okay, so you'd be taking in that loss, okay? Okay, and that would be one trade, and then you'd be going out to a further out month. Okay, so more time is more money, right? So you keep the same strike price and you'd be hopefully collecting a credit. You may have to go further out in this example than October. You might have to go to January, or whatever it is. And as long as you're able to collect a credit, okay, you can make up for that loss and recapture that credit. Okay, that is one good way and one good uh, adjustment you could make. And just keep in mind that adjustments are additional trades, okay? And you have to have the same. If you're still bullish on a stock, yeah, then you want to sell a put, right? Keep that in mind, okay? And so you can roll down, and you can also roll. Um, you can adjust a strike. You can roll out and down to a strike that's less than what you had sold previously in order to collect a credit, and you can recapture that loss. Okay, and you can also roll down. and say you were to increase the contract size, if you added another contract, and you can keep rolling down and keep your manage to take in a credit. Okay, you can make up for all that loss, but your additional risk would be an additional contract. So just keep that in mind. So you can roll down and out, and you can also consider the fact that if you are down, say you're down $1,000, and I'm just throwing that number out there. You have to decide what is your max loss that you're willing to take on any particular stock. Say you're down $1,000. Okay, I would say, let me just close it out. I was really wrong in this stock, and I don't know what the hell I'm doing. So let me just close it out and then say see you later. I'll move on to something else, okay? And or you can look at your overall portfolio of options, and if you're down, like say for example, you have to decide what number you're down. Say if you're down $10,000. $10,000, it's a lot of money, and you might say, I think that's it. I don't think I know what the hell I'm doing, and let me just close everything out because I'm down 10 grand, and the market may be, you may have a bear market, or you may have a market that's up, and you just were not uh, so you weren't so good in your selection of stocks, okay? And it's probably very rare, but it does happen. You never say never, right? With option trading. So you would hope that your hedge will mitigate some of that loss. But if you have a $10,000 loss, I would say that would be it for me. Okay, so it's up to you, to decide what your max loss is on any stock. I say like $1,000. If you're down $1,000 on any underlying stock, then you should close that particular trade out. And if you're down, say 10 grand overall, you should probably consider just closing it out and, you know, just reassessing what you're doing. And maybe you should practice a little bit more, and or it's probably not going to be a fault. It could be just the market conditions. So put selling is a bullish strategy, obviously, and you definitely want the stocks to go up, right? And like this year, the S&P is, I mean, it's it's up. I mean, it's probably up like 10%. Um, yeah, say like 37.50 to 42. I'd say like 11%. So we have a bullish market. So this is why I have a profit in my account. Okay, and this is not an indication of the future. I don't know what's going to happen, for the rest of this year. Nobody knows. So just be careful. You have a lot of gurus out there that that are not showing a real account. This is a real account, okay? Um, you know, you may just see somebody just talking to you and telling you how much money they're making, and they may have an account where they're selling options, and they may have an account where they're buying options, and they're just cherry picking. So also this is a Thinkorswim account, okay, and if you see like a brownish border, that's an indication of a paper trading account. So I was watching one video where some guy was paper trading paper trading, and he was trading huge numbers, and I was like, that's a fake account. That's a paper trading account. I mean, it's fine to use a paper trading account, but um, he's not being uh, very honest, and he's talking about like it's a real account, but it's bullshit. You have to keep in mind that there's money, I guess, out there with education and option trading, and with YouTube in general, and you know Patreon accounts and all that. I really don't have any. I'm not looking to make money off people. I'm just sharing, what I have, and my account in general, which is a real account. So you need to consider how to play defense in your account overall, and just remember to keep your account, your stocks diversified. And I just wanted to share some adjustments that you could potentially make in your account. But I do think that put selling in general, it seems to be the best strategy out there that I know of. I mean, overall, because the market does tend to drift higher, and I just think it's important to remember to hedge your account, and to have some sort of um, risk um, adjustment strategies, in your toolbox, and to take action on them when your trades are going against you. Okay, so that's all I have for you. I hope you have a wonderful Saturday afternoon. Bye.